good time to bring in our technical experts then. Manav Chopra of INDIABULLS Ventures is here with us. Hi Manav, good afternoon and thanks a lot for joining us. With the recent weakness that the market has witnessed post the budget, how are you positioning yourself now? Almost 11,500 on the index. Would you wait to take any sort of fresh position, or would you initiate any position right now?
At the current level, first of all, our bullish stance that we had taken last time is since the markets have breached its June lows, that has been negated, and at the current juncture, there is definitely no good risk reward for initiating fresh long positions on the immediate basis. Since the markets on the medium term scale is still on a structural positive note, the short term trend has turned negative. Keeping that picture in play, on the lower side, 11,400 and 450 are some very important, crucial support junctures for the markets going forward. So on the immediate basis, I believe there are a series of supports on the lower side. One may not want to initiate short positions at the current zone, but on the upside, in case if there is any short-term recovery towards the levels of 11,650, I think those would be the levels which could provide you some room for initiating shorts. Moreover, also Bank Nifty has a very important support around the levels of 30,300. So we need to see how Bank Nifty is also responding near those lows, and specifically also on the intraday basis, we are seeing there could be a short-term pause that the markets could witness. So at the current juncture, I think there is no point of going aggressive in the shorts. Definitely one can take a stock specific approach, but I sense in the near term, one on the index level, one does not have a very clear trade to take one doesn't have any clear trade on the index, at least for the near term perspective.
Okay, so if you're not going to look at trading the index, what kind of stocks do you think one should look at?
Yes, my first buy call, in fact, would be on Tatapower. This is a complete contra bet. The prices has seen a decline from its recent peak of 74, and we have already witnessed over 8 to 12% fall in last couple of trading sessions. Looking at the structure of this stock, it is kind of forming a base formation on the weekly and the monthly, so it definitely provides a very good attractive risk reward. And since the prices have also retraced, and I sense in the near term the important support areas for this stock is around 64 and 65, so one can place a stop loss below that. I believe in the near term perspective, looking at the structure, the stock could regain its momentum and possibly retest its recent swing high, giving us an upside target of 74. My second call is sell on Arvind. In fact, this is one stock which has been a complete underperformer in the markets and has been forming a series of lower tops and bottoms. We have also witnessed the stock breakdown to its important weekly support levels, and the structure of this stock is quite similar to something of Reliance Capital and Reliance Infra. There has been a series of decline into the stock which has been and eventually we've seen the stock form new series of swing lows. So even at the current point, I will not be surprised to see if the stock sees another decline of 15% from the current zone. So a stop loss of 63 for the stock on the upside, for lower targets of 52.
Okay. Bajaj Finance is the other one. Saw a little bit of a fillip in yesterday's session when there was some clarifications put forth by the management of Bajaj Finance, saying that in the earlier interview he was referring to the industry slowdown, not necessarily Bajaj Finance, and also the AUM growth has been about 41% year on year. So that lent some support to the stock yesterday, but it looks like today once again some pressure is building up, about 34.51 on Bajaj Finance. What would you do with this one, Manav? It's been a runaway stock up until now, but seeing some chinks in the armor.
See, if you're looking this chart on the weekly perspective, Devina, the prices have actually breached its past 4 weeks of advance and has closed below that. So it definitely calls for a structural change that has happened on the high time frame. I believe this stock would witness a series of volatility going forward on the upside. There will be stiff resistance around the levels of 3,600 to 3,650, and in such a scenario, it is very difficult to anticipate whether what will be the right buying level. But in such a case, even though the uptrend is still intact, I believe this is one stock that one should not venture out for buying. One should just let this stock be for itself for at least a week or so, and then probably get into it, because such kind of a structural change that a stock witnesses, I believe there could be some more series of decline that could unfold. So The important support area of 3400 on the lower side should be treated as a strict stop loss for anybody who's holding long positions. In case if the stock manages to break below 3400, I sense there could be another 5 to 6% decline coming into this in a very short term perspective.
Okay, that's the technical view coming in on Bajaj Finance after yesterday's respite. Once again, the counter is seeing some selling pressure in today's trade, down almost 4% at day's low. Manav, one more stock which we've been discussing since morning is Interglobe Aviation. Currently, the stock's down 10%, but it's recovered from the lows, which was somewhere about 1260, so almost 130 points recovery from the lows. And as we speak, it's still down 10 to 10.5%, but it's trading now around the level of 1400. What levels would you watch out on Indigo?
See, looking at this structure is quite similar to what happened in Bajaj Finance, but yes, that was at the top. This has already seen a series of decline. Again, such kind of a decline, one has to keep a note of, if we see, the prices also gapped below its 100-day moving average and is currently below that. So if we talk about the recent gap pattern close to the levels of 1500 and 1420, these levels on the upside would be very difficult to close until unless there is a positive overnight news announcement, which would definitely work in favor. But until unless if that doesn't happen, I sense the undertone for this stock will continue to remain weak. And going forward, in case if the stock even rallies towards the levels of 1450, I think one should ideally maintain a short-term sell strategy into this, or probably exit your long positions. Looking at this structure, I sense in the near-term perspective, the stock has a possibility to again decline towards the levels of 1300, and overall the structure is weak. And since it has already breached its important weekly support, I don't recommend anyone going buying it. One should not go and buy at low levels, because looking at the structure, I think we could see some more weakness going forward.
Capitalize on the move for SpiceJet. I mean, while obviously the reasons could be more fundamental and short term in nature, but then you trade the short term. So would you trade SpiceJet in light of that?
Yes, in fact, looking at the chart of SpiceJet, we have seen in the past, the prices have been in a structural, still fair kind of a momentum, and if you're looking at on the medium to long term perspective, looking at the volatility of Indigo and SpiceJet still has that structural bottom in place. And going forward, in case if I have to choose one, definitely SpiceJet in the current scenario is playing out much better. And going forward, I still believe that in the medium term perspective, keeping a view of at least next 2 or 3 months, SpiceJet could see some sort of an outperformance to at least these stocks in the near term. So one has to pick SpiceJet over Indigo, at least for the near term perspective.
TCS is the other one, and reported numbers that came in slightly below street expectations. Margins, though, was dropped the most since 8 quarters, and the stock is now down 1%. So it's actually picked up. It was lower by, I think, about 2.5%. 2100 is where the stock's currently trading at. Manav, not just TCS, but ahead of results, probably taking a look at Infosys, Tech Mahindra, Wipro.
If you are seeing a lot of the IT stocks, they have already seen a short-term decline from its peak. But when we are talking about the whole IT index, if you're looking at the IT index since past 7-8 years, it has been on a very good structural uptrend. And looking at it structures from its all-time highs, recently the prices, the Nifty index did test its upper rising channel of its 9-year trend line. And this point is looking at this point, I think it's a good time where somebody looks to at least look to book profits in the IT space, and one can also go underweight. I sense there has been an important shift that has taken place in the IT space. Eventually, these patterns will take some time to unfold. But going forward, I think any short-term bounce back from these levels should ideally be taken as an opportunity only for trading and not for fresh investments. One needs to have a structural breakout on a larger time scale, at least in the IT space, to reinitiate your long positions. But at the current point, I think there could be a only short-term trading bounce that one should play. So out of this, I think Infosys could be only be one stock that one which is very well placed on the lower side. It has an important support at 710. So if this support is held, we could see a short-term trading bounce towards the levels of 740.45. But again, I like to say for a medium-term to long-term perspective, I would still want to avoid the IT index.
Okay, that's the view coming in on the IT pack right now, and once again you are seeing a bit of recovery coming in from the lower levels. We're inching trading, by the way, very close to the mark of 11,500. And IT, which Manav was talking about, it had a gap down opening, saw some bit of recovery, but still is sitting with some bit of cuts. Okay, let's move on and get some more views on the markets right now. I think, do we have Richard Jain of Angel Broking to get more technical views? Yes, he's there with us. Hi, Richard. Good afternoon. Are you trading the index at current levels?
Hi, very good afternoon. Well, frankly speaking, not really, because in this week we have already seen a decent correction. In fact, last 3-4 trading sessions from the highs of around 11,950. There are no signs of no change in this corrective phase. We have seen that even today's trading session of the markets, the Bank Nifty has shown some outperformance. The overall market breadth is still on the negative side. So I think it's very difficult to trade on the index front as of now. Nifty is trading in the range of 11,410 to 11,420, which is the support area, and also the lower end of the gap which was created on the elections poll outcome day. And on the high side, we are witnessing good amount of call writers active. Yesterday it was 11,700 call option, and today you see the call options and the call writing has even shifted to 11,600. So both 11,700 as well as 11,000 call options, 600 call option have witnessed massive build up. So I think more or less, I think 11,600 to 11,410. This will be the range in which markets would continue to trade in maybe next 1 or 2 trading sessions. But looking at the market breadth, I think the momentum still continues to be on the negative side, and any pullback move towards the 11,600 mark should be then used as a selling opportunity.
Okay, the base is definitely moving lower, and that's what the options data has been suggesting. But Richard, in terms of individual stock bets for this afternoon, what are you recommending?
I have one buy and one sell recommendation. Sell recommendation is in L&T Finance Holdings. In the recent pullback move, the stock prices have already retraced 61.8% of the previous correction. And after taking resistance around its 89 EMA, the stock price seemed to have resumed its corrective phase again. So one can go short in L&T Finance future with stop below 119.75, expecting near-term targets of 110. And Divi's Lab, we are recommending to go on the long side. Some of the pharma names have seen good volume flows in last couple of trading sessions. Divi's is one of those which have consolidated around its 200-day moving average in last 2-3 weeks. So we are expecting a pullback move in Divi's Lab. One can go long with stock below 1575 for near-term target around 1710.
Okay. Just some news regarding REC. They're planning to raise funds via bonds and private placements to the tune of about 75,000 crores. The stock has been up since morning after yesterday's big 15% drop, 143. I think the low it made yesterday was closer to 136. From there, it's picked up quite a bit. So keep an eye out on REC. I think the volumes are also slightly on the higher side. 20.83 million shares have been traded there. Bringing in Rahul Arora of Nirmal Bang. He's joining us right now on the show in our studios. Rahul, very good afternoon to you. Budget is gone. I mean, we didn't really see any big bang moves from the equity market standpoint, aside from the fact that it brought about more confusion with regards to what the FPIs do now, and that led to that big drop on the index. But how would you approach the markets now?
The budget is gone and so are the markets. I think the budget-related correction, I think, is by and large done. I think, you were down 150 points on the day of the budget. Yeah. On Monday, you were down 250, and yesterday you were down 100. So you're already down about 500 points from the high after the budget. And I think to that extent, I think in the short term, at least, the budget-related corrections are done. I think there are some clarifications that they're working on, the surcharge especially. But I think, given the way TCS has started earnings season, I think people are going to be a little concerned. So I think the reason the stock is not down any further than it is today is probably because people are still viewing it as a safe haven, quote unquote. So I think, on another day, this stock could have easily been down 4-5% today. So I think IT itself is now telling you that there is a problem. I think, I don't think the earnings season is going to be anything to write home about, and if anything, I'm sort of more worried about earnings downgrades as we.
In fact, the Citi team that came yesterday said that in their coverage of stocks, ex financials, quarter one is expected to just see a growth of about 3% or so.
It's very probable, and financials also is because of the base effect. I think because you're going to see a sharp decrease because the slippages are sort of coming down on especially on the corporate banks like ICICI, Axis, SBI. So to that extent, as the provisioning is going up, your profitability is going to rise. So I think to that effect, financials should be good. The yields have also come off, so that will also help them. But yeah, I'm sort of in concurrence with that view. So if you look at pretty much every sector, auto is in a bit of disarray. Real estate is sort of going through its own recession. The consumer slowdown has been called out both by the Bajaj Finserv management and the day after by the Titan management. So I think whichever, and you've seen what IT has done. So I think whichever sector you analyze for the near term, I don't think there's going to be risks to the upside on earnings. Therefore, I believe that the risks to the upside on the market are relatively capped. I think each time the market probably attempts to go towards 12,000 because of potential dovishness from global central banks or liquidity, I think it'll probably be a time to sell down. I wouldn't be surprised to see 11,000 on the Nifty before the earnings season is out of the way, to be honest. That's probably another 500 points from here, but I think the way the earnings will pan out, it wouldn't shock me to see that level.
So 1,000-point correction owing to budget and earnings, you're suggesting? We're already done with the budget correction.
Yeah, I would think so.
Okay, so when index was at about 11,900 and it was a polarized move, I think only because of 7 to 8 stocks we were trading at that level, investors were taking refuge to quality stocks. Now those quality stocks are coming under pressure. You've already highlighted Bajaj Twins, Titan, some bit of correction also seen in the other consumer stocks which were doing well. What should investors do now? Should they stay away or look at the other avenue?
So I think it's a valid point you bring because I think at 11,900 we were more than priced for perfection. I think the fruit was so ripe that you sort of one wrong move, and therefore I don't think Titan has been down 12-15% for more than a half a decade, or maybe even more than that. So these are sort of shock moves. You wake up one day and you see the Bajaj Twins being the biggest losers on the Nifty. My sense is, and to the earlier question, I'd probably be hiding more into corporate banks right now. I think there is some amount. I don't think the valuations are screaming rich. I still think there is some room to go. So I would still probably be a buyer in, say, an ICICI or an Axis or a State Bank of India. No other private sector bank, just State Bank of India. You saw what happened with PNB just a couple of days back. And, it's a theme we discussed, I think, 3 or 4 months back. I think life insurance is something that I still think is a great place to be. And I think SBI Life coming to you at about 2.2, 2.3 times price to embedded value for a 20% return on embedded value and a 20% return on equity business, I think it's a phenomenal stock to have. I think these are probably portfolio stocks you should have. If you're ready to sort of, go through the grind of the slowdown, I think eventually consumer will pick up. So I would probably stay with the industry leaders right now. I wouldn't, be too brave as to go and buy the Dabur Imamis of the world. I'd probably stick with Lever, Nestle, Britannias of the world, because I think what's happening is transient. There is nothing structurally wrong with these names, as say in the case of, for example, auto. So I think to that extent, maybe if you are, as Graham said in his very famous book, The Intelligent Investor, that narrow markets have a very bad end. So I don't know if this is the beginning of the end, so to speak, but if it is, you'll probably see flight to safety. And I think the number one sector top down that will probably come out is probably pharmaceuticals for me. I think that's probably one space where a lot of pain has gone through.
It's already come down.
It has. So I think that's probably one place where I think the flight to safety could probably be the highest is what I was trying to say, that there is a reasonable amount of valuation comfort, and each of these names individually has an option value if something goes right for them.
I'm going back to autos. You mentioned consumer discretionary. They too have not done well in the last 1 year. But do you also see some bit of a structural change now in this space? We'll have BS6 implementation coming next year. Because of which the cost of vehicle will go up and the manufacturers will once again have to pass on that cost. So GST is not come down, cost of vehicle goes up, and sales are, as it is, not looking good.
So I think, intuitively before BS6 and the insurance regulations, you would generally sort of, go for pre-buying. So you would say that, just before the regulations come in and before the costs go up by, whatever, 5, 10, 15, 20,000 rupees a vehicle, that there will be a surge of demand. But I think given what the government of India has said on the electrical vehicle side, I'm not so sure if the conventional cars are going to have much of a future over the next 5 or 10 years, is my sense, the kind of tax breaks and rebates that they're talking about. And yesterday you just saw the launch of another electric vehicle car by one of the leading passenger vehicle manufacturers. So my sense is, I think shared mobility is a threat. I think electrical vehicles is a threat, and increasing cost of ownership given, and on top of that, the traffic conditions in most of the metro cities across India is probably, leading people to using metros and shared mobility a little bit more. Summation of all this, I don't think the passenger vehicle market itself is probably going to grow more than a 7 to 8% CAGR for the next half a decade. And within that, I think the market leader Maruti will probably benefit the most. So if you must play that space, it's probably Maruti, not even a Mahindra. But I think ex-Maruti, you're probably going to struggle to see a single-digit growth in the other passenger vehicle makers, whether they're foreign unlisted players in India or other domestics as well. So if you are playing autos, I think probably Maruti is the place to be. I think two-wheelers, is a bit of a toss of the coin right now. I think maybe Hero, if you want to be a little brave, is my sense.
That'll provide you valuation comfort.
That provides valuation comfort, and maybe
and opposite to actually what the market is doing, because it's supporting Bajaj Auto more than Hero.
That point is well taken, but I think that the valuation comfort on Hero, along with the return on equity profile that I'm getting and the cash on books that it has, I think it's a reasonable bet to take. I think Bajaj, for its part, has missed the scooter bus completely. So if you're going to talk about electrical vehicles, I think scooterization is probably a theme that's going to kick off in a much bigger way. And I think Bajaj probably stands off at a handicap compared to a Hero in that regard. TVS would probably be your biggest beneficiary, and probably if you want to play commercial vehicles, I'd probably stick with the industry leader, which is Ashok Leyland over there. So apart from these three names, I wouldn't venture into being too brave in the sector, but like I said, investors should not expect disproportionate returns because this sector is in a disruptive framework. And were we to be having this conversation 5 years from now, none of us know what the way, shape or form of this industry is going to be.
I'm sorry, I'll just have to cut you in there. I think we've got the Finance Minister, Nirmala Sitharaman. She's addressing some queries at the Lok Sabha. Let's cut.
And the connected appropriation bill, because the vote on account, was all passed. And it was effective till 31st July 2019. As a result, this budget, which is now being passed, is essentially to keep the continuity post 31st July, to maintain the government and its expenditure, and also to provide for the fiscal year which is already commenced. So with the constitution of the 17th Lok Sabha and the formation of a new government, the regular budget, as this is now called, the regular budget for 2019-2020 has been proposed to the Parliament in this session. The regular budget, as we call it, 2019-20, which includes the Finance Bill 2019, the demands for grants 2019-20, will cover the entire fiscal year 2019-20. I wish also to draw the attention of the honorable members through you, respected Speaker, sir, that this is the second budget. This is the second budget after the implementation of the Goods and Services Tax from 1st July 2017. So the highlights of the budget estimates for 2019-20, I would like to just draw your attention and elaborate on some of them. The entire detail, the financial data are all provided in the entire set of budget documents which was given to all members. With a continued emphasis on empowering states, the total resources transferred to the states, including the devolution of state share in taxes and the releases under centrally sponsored scheme in B 2019-20 is estimated to be 13,29,428 crores. I repeat that number, 13,29,428 crores. This entails an increase of, this is important, this entails an increase of 82,845 crores over the RE of 2018-2019 and 2,44,298 crores more than the actuals of 2017-18. So I would want to emphasize that 2 years after the GST implementation, when even as we present this budget, we are very clearly saying that under the central sponsored scheme, the amount which is being spread is far higher than what it was earlier. Then the budget 2019-20 reflects the government's commitment, and I'm happy to say that. It reflects the commitments of this government to substantially boost investment in agriculture, substantially boost investment in social sector, particularly in education and in health, keeping the fiscal deficit at 3.3% of GDP as against the 3.4% which was envisaged in the interim budget. In the BE 2019-20, government is committed to continue the path of fiscal consolidation. Let me reassure this House that we are committed to continue the path of fiscal consolidation without compromising on the requirements of public expenditure placed by the various sectors. So there need not be any worries or anxiety that if we are really insisting on keeping the fiscal consolidation map, will the social sectors, will health, will education suffer? No, not at all. We are ensuring that they are taken care of, and this has been achieved through prudent rationalization of expenditure and mobilization of additional resources. In the budget estimates of 2019-20, those who are interested in the numbers, I would like to repeat here, the total expenditure is placed at 27,86,349 crores, showing an increase of 3,44,136 crores. The total expenditure of the government has increased by 3,44,136 crore over the BE of 2018-19, and an increase again of 3,29,114 crores over the RE 2018-19. So with figures, I wish to say here, not now.
माननीय वित्त मंत्री जी, आप उनको अलाउ मत कीजिए, आप बोलिए, आप कंटिन्यूस कीजिए, आप कंटिन्यूस कीजिए। हाँ जी, मैं आपको बाद में मौका दूंगा।
Sir, any concerns on the figures which have been released till now, figures which have been picked up from other sources like economic survey, which the chief economic advisor has brought out? I have a separate section to address during my speech today. So I hope that will address the concern. If I only can read your mind, member, I will.
स्वागत माननीय सदस्य, प्लीज माननीय
Speaker sir, Professor Saugata Roy is very senior and has a lot of concern. Noticed my absence about not being in the House yesterday. Yes. And I shall respond to him and to the concerns that he's raised with just one comment to make. That data did not make a part of my speech, was something which I myself stood up to say as soon as I finished the budget speech, with your permission. And I wish Professor Saugata Roy heard me say that then, that it was part of the annexure to my speech and part of an entire budget document. If only Professor, respected Speaker, if only Professor and a senior member of this House heard me as much as he noticed that I was not in the House, heard me as much as I spoke that day and went into over the weekend into the budget document, he wouldn't have this question today. But never mind. So I continue with your permission. To speak about my reply to the members. So the budget estimate clearly, which I've read out now, the increase in government's expenditure. And the total expenditure includes a provision of 12 lakh and 2,404 crores under the various schemes. So the figures for expenditure, particularly on sectors which will be of keen interest for most of us, I have explained here. There is, of course, a lot of questions about tax receipts. I'll take 1 minute of your precious time, Speaker. The gross tax receipts, and this is not something which I'm saying today, they are all in the documents. The gross tax receipts are budgeted at 24,61,195 crores in the BE 2019-20, which marks an increase. Members, please note, tax receipts, I have mentioned what I've said in the BE 2019-20, and that marks an increase of 2,13,020 crores, 9.48% increase in tax receipts over 2018-19 BE RE. Centre's net tax revenue after transfer of state share and transfer to National Disaster Response Fund is estimated to be 16,49,582 crores, with an increase of 1,65,176 crores. Again, an increase of 11.13% over the RE of 2018-19. So nowhere, I reassure you, Speaker, sir, nowhere is a decline. Expenditure is improved and increased. Income receipts have also increased. So I like to assure this House that the figures which I'm reading now here are there for you to refer and if necessary come back to me on again. The non-tax revenue receipts are estimated at 3,13,179 crores in the BE of 2019-20, and the revenues expected from distance investment, which will be of interest to many of our members. The revenues expected from this investment are budgeted at a realistic 1,05,000 crores in BE 2019-20. Now let me assure you again, the projections made in the budget are realistic and adequately provide for items of expenditure such as defense expenditure, pensions and salaries, internal security, and other welfare programs and establishment expenditure of the government itself. So to fully finance these expenditure commitments, necessary resource mobilization from tax and non-tax sources have also been envisaged. So, as I said, members have taken a lot of interest. A lot of inputs have come from members who have raised various different questions too. But here I wish to aggregate the various comments made by different members. Some of them will relate to one or two members. Some of them will relate as my response. Some of them will relate to many members. So I've tried only to collate all of them by topic, and the response is more for each one of those honorable members who have raised the questions. So instead of going through response by each member, I'm going with a collective collated version so that all of our times can be more optimally utilized. Speaker, sir, I recollect that when I was presenting the budget, I very clearly said that this budget certainly comes at a time when an interim budget had already been presented. I'm also conscious that this is the last year of the 14th Finance Commission, and this year, probably sometime in November, October, November, the new commission, the 15th Finance Commission's report will be received. It will be submitted to the Rashtrapati, and then, of course, the government will get to seeing it. And therefore, the budget which comes in February of 2020 will take on board the recommendations as it is then decided, as it would be then decided of the new Finance Commission. But then this budget definitely, as I kept saying to some of my colleagues, has two bookends. One is the interim budget which was submitted in February before the elections, and the fact that there is a Finance Commission. And between the two bookends, we are making provisions, and therefore, this budget gives a big picture of this newly elected government which has a strong mandate from the people of India. And as a result, the big picture tells you what we want to do in the 10 years, which was broadly mentioned even during the interim budget. And even as it does roll out the 10-year vision, we've kept ourselves a mid-decadal target, which is the 5 trillion economy, $5 trillion US dollar economy target. And towards it, we spoke of effectively bringing a good cycle towards investment, towards generating more jobs, towards greater manufacturing within India and making India a manufacturing hub.
Okay, that's the Finance Minister Nirmala Sitharaman speaking in the Lok Sabha and talking about the budget which was presented last Friday, and she categorically mentioned fiscal consolidation is something she will be sticking to after they set fiscal deficit target of about 3.3%, which was brought down from 3.4%, which was set in the interim budget. And talking about the markets, 11,500. Every time, by the way, the index is breaching that mark of 11,500. There is some buying which is coming, but let's see if we can maintain this level or not. Let's quickly get some views going on a couple of the stocks and see which are the stocks which are moving around right now. And we've already discussed Interglobe Aviation, but what I want to highlight is Sun Pharma. I think since morning, though the markets have been volatile, but Sun Pharma has seen some bit of gains, and it also happens to be one of the top gainers in Nifty, 2% higher. 394 is currently where the stock is trading. Ruchit, would you take a bet considering the move that we've seen today on Sun Pharma?
I think yes, because if you look at recent historical data, also around 365, 375, this has been a range where we have couple of times we have witnessed a good buying interest coming in. Even in yesterday's session, the pullback move from the support of 365 was backed with the higher volumes. So this stock has the potential to extend this pullback move towards 427, 430 kind of levels. So at current levels or on minor dips, one can initiate fresh long positions, keeping stop loss below 362 and expect target around 427.
All right, that is Sun Pharma for you. Just one quick word on UPL, if you may, Manav. And that stock has been an outperformer up until now, where we've seen some pressure building up in the last 2 or 3 trading sessions. 633, fundamentally nothing wrong. It's a pretty sound company in lines with what PI Industries has been doing. It's been favored because of its export niche compared to some of the domestic players who don't have that export advantage. But from a pure pricing standpoint, at 633, what would you do with the UPL?
Yes, in fact, the prices has important support around the levels of 625, 630. So looking at the charts, the prices have already declined by over 7-8% in a very short-term perspective, and the oscillators are in the oversold areas. I believe in the near term, we could see a short-term bounce from the current zone, and one can also maintain a trading stop loss below the levels of 615. For the near-term perspective, we can expect an upside target of close to 660, and looking at this perspective, I think one can keep this view for at least 3 to 4 trading sessions.
Okay, that's UPL for you. Bringing in Sunil Shah of Turtle Star. He's joining us on the show right now. Sunil, thanks very much for taking out the time. While we're pretty much set with the mood of the market, it seems like most of the commentary revolves on having a bottom-up approach. Start to look at some of the stocks from the broader market space as well. Is that a view that you concur with, and how would you position yourself if you had to be more stock specific?
Well, so my thought is that the market has got completely demarcated. There is those premium stocks, the ones which are one of the best corporate governance and debt-free and no pledge and none of those. Those are trading at extremely high valuation. So from here, if anybody builds a position into those kind of stocks, then maybe the return which will be generated over the next few years might not be that impressive, because price is actually capturing a lot of the fundamental strength that the business has. So it's a great business, but maybe not a great investment idea. Then on the second side, you have those red category of stocks which are completely butchered down. They have those huge problem of debts, etc. So I think the right positioning would be to look at quality and, as you stated, in the right sense, which is a bottom-up approach, look into individual stocks with merit. So few of the businesses are good, let's say the corporate banking business, and there you have those change of management at guard. So the new management has come, whether it's an Axis Bank or an ICICI Bank, both of them. So those are not trading at very, very high valuations like the HDFC Bank, and because of the change in guard, a lot of things are going to improve from there. Also the macro environment in terms of NCLT resolutions which will happen. So most of these banks, they have already provided for the sad assets or the bad assets, and so if any recovery happens, it will still straight away flow to the bottom line. So I think it's going to be a mix of great quality available at a price is what one has to look at, and look at investing. Also, ideally, maybe sip it out over the next few months, because the June quarter will be really a washout in terms of growth numbers.
Yeah.
So market will still give one more opportunity even at that point in time. So ideally, make a list of the stocks that you like.
So would your two picks be Axis and ICICI, or would you have something else in mind?
Yeah, obviously Axis and ICICI are the large cap stocks. There are something also in the gold finance business. Let's say Manappuram or Muthoot. Yeah, both of them are going to do very well. Their risk profile is completely managed. They have a great spread, and valuation wise they are trading at very modest valuation. So it would be a bouquet of 4 such ideas, or maybe another which can be looked at. So I think lot can be done. I think one big theme which will emerge in the next few years will be water theme into every household, which is what the government is targeting. So if you look at the government's track record of delivering what they had stated, water will be one big thing which will happen in the next few years. So there will be companies in the pipes business. I think some of them are very, very nicely positioned. So we have to have a bottom-up approach, look at the macro environment and see if management quality is good, is where opportunities are there for one to look at investing.
Okay, so those are a couple of themes which Sunil is betting on. Sunil, stay on while we also go across to Darshan Mehta to find out what the dealing rooms are recommending in today's session. Darshan, good afternoon.
Good afternoon, and again, there is immense weakness in the market. One of the stock which is seeing heavy selling today, down almost 1.5%. It's managed to recover from the day's low, but nevertheless, there is domestic fund that's selling that's happening in Sun TV, so that's something that we are watching out for. The other counter in which there is a little bit of selling that's happening, in which foreign funds are selling, is Bajaj Auto, and that's what we're watching out for. And finally, some of the stocks which are doing well are some of the mining companies like Coal India and NMDC. So there is a little bit of accumulation that's happening. Some of the HNIs are accumulating. It's up 4%. NMDC also, the expectation of a strong result, at least on the mining side of the business, is looking good. So NMDC is something that some of the HNIs are active in today.
Darshan, thanks very much for that. So those were some stocks to keep in mind. NMDC, a decent enough move in today's session. Will a 4% uptick today, Ruchit, entice you to enter into an NMDC?
I think until we see again a breakout above the recent high of 121, I think one should take this as a pullback move. Although the broader trend has been positive, and if you compare this stock with other metals names, then this has been one of the outperformer in the recent past as well. So there could be some time-wise consolidation phase in the range of 105 to 120 for next few trading sessions. So if any existing long positions are there, I would still continue to advise to continue to hold on the long positions, but would not create fresh longs given the risk-reward ratio is not that favorable.
Okay, I just want to highlight 2 stocks. By the way, they are likely to enter into the F&O band for tomorrow's session. So watch out for IDBI and also for Reliance Infra, as the open interest for both of them, as of now, the data suggests that it could be exceeding the 95% mark, which is required for a stock to enter into the F&O band. Remember, last 10 to 15 minutes, just a caveat, the trends seems to change, but as of now, it is looking like that it will breach that mark of 95%. Okay, that's about the 2 stocks, but Sunil, the stocks you just highlighted for for us. I think last time also you said you are pretty much positive on the gold financing companies and also in a couple of banks. But tell us something which is corrected, a good quality stocks. We've been discussing Titan, Bajaj Twins, which have been correcting in the recent past. Would you, or even Maruti, which has slipped below the mark of 6,000. Would you look at any of these stocks now, considering they have corrected from their higher levels?
Yeah, so I think auto theme will be there for a period of time. So again in that, maybe a few of the auto ancillary companies would be the ones to keep a watch on. Minda Industries is one such case in point, which is having diversified product portfolio. They have a diversified customer base as well. And importantly, it's going to be the new product launches which are going to come through. So airbags is something which is going to be mandatory in four-wheelers starting from September onwards. And Minda Industries is one such company which is positioned in that category of providing airbags to the four-wheelers. So I think apart from the industry growth rate, Minda Industries is one which will grow at a rate which would be 1.5 or almost 2 times of the industry growth rate. Because of its, as I mentioned, quite a huge product portfolio. They are into switches, they are into lights, they are into wheels. And all of these products which Minda Industries is making is something which will not get obsolete in the electric vehicle. So again, it's going to be a good long-term story for the company as well, and I think this should be one such play if one has to look at investing. Again, just a disclaimer that all the stocks that I'm talking are ones which are there into our portfolio and for our clients and our firm as well.
Sure, and the stock's doing well, at least in today's session. It's up about 9 to 10%. Very quickly, let me also get a technical view on Minda Industries. Manav, up 9.5%. Would you trade this one?
See, the prices have actually seen a fall from its recent peak and is testing its important weekly and monthly support zone. So for the near term, I will just looking at the overall structure, one should maintain a wait and watch approach until unless we don't see a break above the levels of 320. There will not be a structural breakout into the stock. So for the near term, I think we'll just have a wait and watch approach. Yes, the important support areas for the stock is near the levels of 260, 265. So until unless that is not breached, I think there could be some more buying that could happen at the lower levels. But for any fresh momentum trade, we need to see a break on the upside.
Okay, that's the technical call on Minda Industries. 10 minutes to go for markets to close. Let's get you the closing strategies from our experts. Richard, coming to you first. Any BTST or any STBT for tomorrow's session?
Metals have shown some weakness, and this weakness could continue in some of the high beta names. So Jindal Steel is one stock which is indicating a probability the stock would head lower towards this target of 127. So at current levels, just from a STBT perspective, one can go short on Jindal Steel with stop loss above 135 and expect target around 127 tomorrow.
Manav, what about you?
At the current levels, Lupin is in fact one stock which is seeing a fresh breakout from its daily consolidation, and the prices have also bounced from its important weekly support zone on the lower side. 750 is an important support, so one can have a stop below 750. For a near term, we can expect an upside target of 785.
Okay, that's a call coming in on Lupin. That's a buy call. Manav, we'll let you go on that note, but Richard, stay on with us while we get your closing comments as well. Just want to mark few stocks. Pull up Balkrishna Industries, that's down